What's up, everybody? Welcome back. Happy Monday. Hope everyone had a good weekend. I'm going to kick this week off with a review of another DeFi project, but unlike the last few, which have more or less imploded to varying degrees, this project is still chugging along and still paying high yields 1 year into its existence. Drip Network is the project. Now, is it safe to invest? And realistically, how much longer can they go on? We'll cover all that in today's video. Don't forget to hit the like and subscribe button, to drop a comment down below. And remember, with these DeFi projects, they're extremely high risk, even by crypto standards. And so extreme due diligence should always be applied when considering whether to invest. Without further ado, let's dive in. Drip Network. Here's the logo. They do have a token. It's ranked number 4,500 in terms of total market cap, so it's kind of a small market cap coin. They're on the BNB chain. It's Drip Network. It's not to be confused with Drip Token, a similarly sized coin. That's a shop to earn token. Totally separate project. Drip Network is the one we're dealing with here. Now, here's their price chart. First impression, this probably just looks like the typical coin that came out in 2019 or 2020. Rode the bull wave of 2021 and has sort of petered out since then. That's not really the case here. It first hit exchanges in August of 2021, about a year ago, so a little later than most. And then this price peak here, it's a 25x by the way, this price peak here came in January 2022, sort of when the bear market was kind of already started. So this pump here, this bull run here, this was done sort of independent of the crypto-wide bull run of mid 2021. So there was definitely some hype and some hoopla going on around here that led to this, major escalation in price. We'll get into all that in a little bit. But first, what is Drip Token, Drip Network? So here's the website looks like. They're founded in July 2021, as mentioned, around when the coin hit exchanges. They build themselves as the first ever deflationary daily ROI platform, offering 1% daily return on investment. So huge returns again. But obviously with Stable Fund, a few days ago, we went over that one, offering 1.5% daily returns, and that one sort of imploded last week. So you want to, approach all these with extreme caution. So this project Drip Network, they offer 1% daily returns up to a maximum of 365% of the principal. So you can keep it accruing for 1 full year, and then after that, you do not earn any interest. So there's no point in keeping the coin staked after 1 year. Rewards are capped at 365%. And rewards come from a 10% tax on all transactions buy or sell, with a few exceptions we'll get into in a minute. Now your deposit, this one's a little bit unusual. Your deposit to Drip Network is burned. It's lost forever. You don't get to keep it. The company doesn't keep it. It is just burned. But you do get to keep the interest, 1% daily, up to 365% total. So putting it all together, here's how it all works. Let's say you deposited $1,000 in this Drip Network. So you'd initially pay the 10% buy tax, so you'd be left with $900. Then the 1% daily rewards would start accruing on the $900 every day. So if you just leave the money there, if you don't take your rewards out, but you also don't compound them either, after the year, you would get $3,285 back. So minus the $1,000 initially, the principal you don't get back, you're left with a profit of $2,285. So pretty good, right? But again, that doesn't include compounding. So this is the lower risky strategy here. And then as for the 10% buy sell tax, so they're only traded on PancakeSwap. This is pretty common for DeFi projects. Most are only here. You're hit with the 10% buy sell for all transactions on this exchange. But if you use the swap exchange on the Drip Network website, it's called the Fountain Swap right here. You can swap BNB for Drip, no other tokens, just those two. But if you use this, the 10% buy tax is waived. Now the 10% sell tax is still in play to discourage people from selling and ending the staking early, but the 10% buy tax is waived. So you probably want to use this as opposed to PancakeSwap would be my recommendation. And then also there's no lock-in period here. So, some yield nodes is a 6-month lock-in period. Stable funds, I don't believe, had any. This project has none. So that's a definite major advantage. There's just the 10% sell tax, sort of early withdrawal fee. You can think of it that way, but there's no lock-in period. Some other unusual stuff about it. It is an inflationary coin, but inflationary only if need be. So I've never really seen this in a project before. This is kind of cool, but check it out. If there's a situation where the tax pool is not enough to pay drip rewards, the new drip will be minted to ensure rewards are paid out. But it's kind of like, but given the ingenious game theory behind the drip network, the probability that the system will need to mint new drip to pay rewards is extremely low. So basically, if the mechanism, the business is failing and we need to mint new drip, we will. It can be inflationary, but we don't foresee that happening, so it probably will not be inflationary. Kind of cool. I'm always down for some creativity here. And then I'm not sure if they've minted new coin. I don't think they've had to mint new coins yet. I'm not sure on that. Now, there's also referrals. You can earn more for referrals. So you'll receive bonus rewards for referrals on so anyone you refer to the system, you receive bonuses based on the amount of their deposits. Then you also receive downline bonuses from players that they refer based on the amount of drip tokens that they hold in their wallet. So it sort of has elements of kind of a multi-level marketing system here, whatever you want to call it. And then you can earn rewards from a maximum of 15 investors, but not any more than that. And then, so I mentioned that before, all those rewards, those hypothetical rewards on the $1,000 initial investment was without compounding. So if you do compound your investment or hydrate, they call it a drip network, you keep your tokens in there, keep them hydrating. The main benefit to this is you get more rewards, and then it incurs only a 5% sell tax as opposed to a 10% tax on when you sell your tokens if you don't if you don't compound them. And then another way of receiving rewards is through the reservoir, which is the reward pool of Drip's liquidity pool. Investors can provide liquidity to the Drip BNB pool and receive a share of the 10% transaction tax that I mentioned once. So of the 10%, 2% goes to the liquidity providers, 3% is locked in the liquidity pool, and 5% goes to the reservoir pool. So you can share in that tax if you put your rewards in the reservoir. So obviously good marketing here, called kind of ties in with water, liquid, bodies of water, drip, etc., etc. There's also something called a whale tax to discourage individual whales from sort of monopolizing the game and outplaying everyone and taking all the rewards for themselves. So if any whale does a sell transaction that accounts for more than 10% of the total supply of drip tokens, he has to pay a whopping 50% tax on that. And then it goes the sliding scale down to if they do a transaction that accounts for 1% of the total supply of drip tokens, and they pay a 5% tax on that. And then this person did the math here to see what the break-even points are. So if you just put your money in, then do nothing for 137 days. So don't take your money out, but don't compound it either. You just sort of let it sit there. You will break even after 137 days, and then everything from there on will be gained. So basically, from whenever you invest, if you think that the project is going to keep, is going to still be chugging along 137 days, 4.5 months from then, without without failure, then you will be in the profit. If you don't think so, then you would be in the loss. Now let's look at the team. So unfortunately, with all these DeFi projects, a lot of times the teams are anonymous, which in some cases, that's not a problem. Typically with the non-DeFi projects, a lot of times there's just programmers who have a main job and they don't want that job, knowing they're doing a side job and cryptocurrency, or maybe they just have a bunch of sort of little mini gigs. Developers are known for that, kind of having multiple jobs at once. They want to keep independent. That's normal with these. You'd kind of prefer to see some team members, but I guess it was founded by two people. Their forum handles are Forex Shark and BB. No one knows who they are. I didn't even see any KYC anywhere in the white paper or on the website or in CoinMarketCap. Maybe it existed. I didn't see it anywhere. Forex Shark, here's his Twitter page. He's got a pretty big following, 20,000 followers. He doesn't really post that much, only once a week, so it doesn't really help too much there. As for their audit, they were audited and passed, but it's by a company, an auditing firm called Slither. I'm not familiar with them. Obviously, it'd be a little more comfortable as a big firm like Surtech. That's the big auditing firm. It's not to say Slither isn't qualified, and they did pass this audit from what the audit says here. But just keep in mind that Slither is not a very well-known auditing firm, at least not to me it isn't. Roadmap, future roadmap. So they plan on enabling a cross-chain bridge where they're adding to their swaps. Instead of just being able to swap BNB and DRIP tokens, you'll also be able to swap ERC20 and TRC20 tokens. And then they also plan on offering NFT rewards. This is one project that actually doesn't currently have any NFTs in its play, which is sort of unusual. NFT rewards will be given for players who hit specified goals, use the cross-chain bridge, and also rewards for the team competitions. Well, that's it. And so in my research, I didn't come across anyone having any problem with withdrawals or claiming rewards on Drip Network. Of course, it doesn't mean things can't change in an instant the way they did with Freeway Finance, Stable Fund, or Yield Nodes. But with this project, remember, there is no initial lock-in period, so that definitely does make Drip Network a little bit safer than most, but still, you do lose your initial deposit regardless, and so you would need the platform to be operational and liquid for at least a few months from the time of your initial deposit in order for it to be profitable and worth your time. Remember, these DeFi projects are the most high risk in all crypto, so do a ton of due diligence if you're considering investing. We'll be back tomorrow with a new episode. Hope everyone enjoyed this one. Hit the like and subscribe button. Drop a comment down below. Ben Crypto signing out. Catch you later.